South Korea's stock market shock may hit Canada and the United States. South Korea's KOSPI triggered market-wide circuit breakers during 2 consecutive trading sessions as investors rushed to sell technology and semiconductor stocks. At one point on Wednesday, the index had fallen by as much as 12% before recovering to close almost 6% lower. The technology-focused Kosdaq also dropped more than 6%. SK Hynix shares fell nearly 10% after the memory chip manufacturer reported weaker than expected second quarter operating profit. Samsung shares declined by more than 5%. Japan was also affected. The Nikkei 225 dropped more than 3% during the trading session before recovering some of its losses and closing 1.49% lower. This is not simply a story about Asian stock markets. South Korea is one of the most important suppliers of memory chips in the world. Samsung and SK Hynix produce the advanced memory used in smartphones, computers, data centers, and artificial intelligence systems. High bandwidth memory is especially important because it works alongside processors designed by companies such as Nvidia. Without enough advanced memory, even the most powerful artificial intelligence processors cannot operate at their full capacity. That means a major shock involving South Korean chip companies can quickly spread into the American technology industry. Companies including Nvidia, Micron, AMD, and Broadcom may face additional pressure as investors reconsider whether artificial intelligence stocks have become too expensive. Technology companies also represent a large portion of the Nasdaq and S&P 500, meaning a semiconductor correction can pull broader American markets lower. This sell-off is being driven by several concerns arriving at the same time. Investors are questioning whether artificial intelligence companies can continue delivering the enormous growth already reflected in their valuations. Some corporate earnings have fallen below expectations, while uncertainty surrounding future guidance has made investors more cautious. Leveraged retail investors in South Korea may also have intensified the decline. When investors borrow money to purchase stocks, a falling market can force them to sell quickly to cover their losses. That creates additional selling, pushing prices even lower and potentially forcing more investors out of the market. Renewed tensions in the Middle East have added another layer of uncertainty. During periods of geopolitical instability, investors often move money away from technology stocks and toward assets considered safer. For the United States, the immediate impact is primarily financial. American semiconductor stocks can decline in sympathy with Asian companies, while concerns about expensive artificial intelligence investments can spread across the technology sector. There may also be questions surrounding companies such as Microsoft, Google, Amazon, and Meta. These businesses are spending enormous amounts on artificial intelligence processors, cloud infrastructure, and data centers. If investors begin believing that artificial intelligence demand is slowing, they could pressure those companies to reduce spending. That would affect chip designers, memory manufacturers, data center builders, and energy providers throughout the artificial intelligence supply chain. However, lower memory prices could also create an advantage. Cheaper components would reduce costs for American data center operators, electronics manufacturers, and consumers. The danger would emerge if semiconductor companies respond to lower prices by reducing production or canceling expansion projects. That could produce tighter supplies and higher prices later. For Canada, the effects are less direct but still important. Canadian pension funds, investment managers, and individual investors hold American and Asian technology stocks. A sustained global semiconductor correction could reduce the value of those portfolios and increase caution across Canadian markets. Canada also imports vehicles, electronics, and industrial equipment containing South Korean chips. Any major changes in semiconductor production or pricing could eventually affect Canadian importers, retailers, and manufacturers. Ontario's automotive industry is particularly vulnerable to semiconductor disruptions. Modern vehicles require chips for safety systems, navigation, entertainment, engine controls, and electric vehicle technology. Canada has already experienced how shortages originating overseas can interrupt vehicle production and temporarily shut down assembly lines. Canada's artificial intelligence industry could also feel the pressure. Toronto and Montreal have become important centers for artificial intelligence research and software development, but Canadian businesses still depend heavily on imported processors and memory. Lower hardware prices could help Canadian companies adopt artificial intelligence more quickly. Prolonged supply uncertainty, however, could delay data center projects and make corporate technology spending more cautious. A broader global movement away from risk could also strengthen the American dollar and place additional pressure on the Canadian dollar. Middle East tensions could simultaneously raise energy prices, potentially benefiting Canadian oil producers while increasing inflation and costs for consumers. None of this means the artificial intelligence expansion is suddenly over. Demand for advanced computing, memory, and data center capacity remains strong. Part of this sell-off may simply be investors taking profits after technology stocks climbed rapidly. But the losses in South Korea provide an important warning. When expectations become extremely high, even one disappointing earnings report can trigger a much larger correction. The key question is now whether this remains a temporary panic or becomes the beginning of a broader reassessment of artificial intelligence investments. Because when the companies supplying the memory behind the artificial intelligence boom begin falling this quickly, investors in the United States and Canada cannot afford to ignore it.